Silver's 2023 price predictions, and when will we see $100 silver? So before we get to my price predictions for silver in 2023 and when we'll see $100 silver, let's just cut to a short clip, under a minute, of David Morgan with his price predictions for silver in 2023.
And they say the silver price has been subdued this year, mainly to the strength of the U.S. dollar. However, looking at a rally in silver prices, they expect to see the silver price forecast for 2023 is between 25 and 17 in 2023. Again, my perspective is that I think we can get above 25. I think we could certainly hit 30 or beyond. Just, again, depends a lot more on the black swan or stuff that the mainstream financial press and the establishment, Horace is, I consider, part of the establishment. They're a wonderful company, but they're going to be very, very conservative. And don't look out to the actual possibilities that I see and have commented on time and time again. That doesn't guarantee they're going to happen next year, but we're getting closer every day.
So here's a cool chart from Crescat Capital, silver to currency supply ratio. And I guess the question mark is this the bottom in precious metals? Now, the M2 currency supply is falling at the moment. However, we'll come back to this and discuss it in a second. But we also need to look at silver from a supply side. Now, just recently I did this video, silver supply will lead to $100 silver. So we need to look at the demand side, but we also need to look at the supply side. And we got this article from Small Caps that came out late last week. Western vaults drained of silver to meet soaring Indian demand. The article says, traditionally, India's precious metals dealers have received their gold shipments by air, but their silver normally came by sea. That made sense due to the relative values per ounce of the two metals with the gold-silver ratio. However, such is the demand for silver in 2022 that this metal too is now being sent to India by air cargo. The urgent need to find stocks of silver now is partly explained by the fact that demand was down last year due to the restrictions. Yeah, you get it. But that factor is being superseded by reports that new investment demand is flourishing, especially among the poorer Indians as well as younger ones of all levels of economic wealth. In 2021, India imported about 4,500 tons of silver. By the end of November, the import figures for 2022 was passing through 8,000 tons, which is around a 78% increase. We're still a month ago. The forecast for 2022 was for India to import 5,900 tons, so those predictions are being left in the dust. At the same time, London vaults had by the end of September seen huge outflows of the metal. These diminishing vault stock levels do not appear to be linked to increased demand in the West. Silver ETF demand has been sidelined, yet there have been substantial withdrawals of physical silver from both COMEX and London vaults. Estimates are that those vaults have seen outflows totaling 400 million ounces, or just over 11,300 tons so far this year. So the surge in imports has been partly ascribed to increased industrial demand, but jewelry offtake is the main consumer of silver in India. After the US and Germany, India is the world's third largest consumer of silver. It has been described as the poor man's gold due to the fact vast numbers of people in the country see gold and silver as vital stores of value, but many, particularly in rural India, cannot afford the amount of gold they want in the form of jewelry, so silver is their alternative option. In addition, Indian millennials, middle class or poor, seemingly favour the cheaper silver and are not so interested in gold as are the older generations. India, when it comes to mining silver, is a very minor player. Its mining output annually is just 0.67 tons. This compares with the world's two leading miners of the metal, Mexico, with annual production of 6,000 tons, and Peru at 4,000 tons, with Australia at just over 1.2 tons each year. country's largest mine is the Sindisa Kurd operation in Rajasthan. Go the Rajasthan Royals, if they still exist in the IPL, which produced almost 11,000 ounces in 2021. It is expected to close in 2027. Another important mine is Zawar in the same state. This is expected to close in 2029. So more imports coming more silver import coming India's way. And yet, as I described in that previous video that I did about silver supply, we're going to have an imbalance there. In fact, that's already showing, as I mentioned in that video. And as we move forward this decade, I see the fundamentals of silver from both, you could say, a jewelry perspective, but an industrial perspective, and importantly, a store of value, which I'll come to shortly. So the fundamentals of supply and demand are definitely matching up for a upward price in silver. All right, so here's a chart for those of you that follow the Kondratiev cycles or waves, K waves as they're known. If you're unfamiliar with the Kondratiev wave, it's named after Nikolai Kondratiev, who was a Russian economist, who pretty much said, he went against the communists and said that capitalism won't collapse. In fact, it goes in cycles. Look, I'm not a subscriber of the Kondratiev wave, but I know a lot of people who are and are very, very good investors and traders, and they use it. So I don't dismiss it. I don't throw it in the bin, but I don't subscribe to it, if that makes sense. But on this chart for silver, using K waves, well, you can see that if this is translated right, then the top for silver would be 2028 in this bull market, or if there is a fifth K wave, and you're looking at around 2034. Now, this is $100 silver. So you can see the price on the right-hand side there on that chart goes from, well, $2.50 up to $50. And you can see using this K wave that's about double. So you're looking at $100 silver by 2028 to 2034. But I'll talk about where and when I see $100 silver in a second. So firstly, let's have a look at how silver and gold has performed in 2022 so far. And before I get to my predictions for 2023 and when we'll see $100 silver. So gold and silver, positive returns. Obviously, natural gas and oil, energy in general, coal, all of that has been exceptional performer throughout 2022, as well as some other commodities as well. So commodities have done well in general. You can see also that the US dollar increased 9% during that time. And you guys know on this channel that I own a lot of US dollars. I've done videos on it, on the whole dollar milkshake theory and why it does make sense. Even though I've got some fellow Austrian economists who, don't subscribe to that theory. I do in the short term. Long term, I think we are right as Austrians where this ends up. US dollars has been a good performer. Look what hasn't though. The NASDAQ, 30-year bonds, 10-year notes, Russell 2000, S&P 500, and so forth. Now, as you guys also know, I have started buying some bonds, and I've been increasing my cash position, mainly in US dollars, especially as the US dollar has weakened a little bit in the last few weeks, I've taken advantage of that to buy some more short term. Now I'm on the short term with US government bonds, like 4.6% yield on a 6-month bond, and that's really just for capital preservation. And that yield is just helping me out, just covering a little bit of that purchasing power that I'm losing on CPI. However, because I'm bearish, risk on assets like stocks and real estate, etc. Well, that's okay. Having cash and holding short-term bonds is going to increase my purchasing power versus those other assets. Versus CPI, maybe not, but versus those other assets, in my opinion, it's going to increase in purchasing power. But gold and silver can play that same sort of role. You can save in gold and silver, and I've done videos on this, wealth cycles. And as gold and silver go up versus other assets, then you can change into those other assets, which I've done, and I've shared my story, done videos on that. So it's just interesting to see what's performed well and what hasn't in 2022, moving and then looking forward to what's going to happen in 2023. So I've shared this chart before. Now, I do believe in the first half of next year, in fact, probably even in the first quarter of next year, that we're going to start to see some things break. Definitely in the first half, but I wouldn't be surprised if it's in the first quarter. That liquidity event start to happen. The credit markets, perhaps, some things start. Whether it freezes up, I don't know about that, but there's going to be some things in credit markets, and I think we'll see the Fed at some point in the first half of next year pause at a much higher level than what anyone thought that they would 12 months ago. And then as things start breaking, stock market starts falling, credit markets start freezing up, I think in the second half of next year. Okay, so the Fed will pivot in the second half of next year, but there's still, there's going to be so much so-called blood in the water, blood on the streets, that you're going to continue seeing these falls, and that's what we've seen throughout history with Fed pivots. I've shared this chart before, and so I think that is going to happen. And so in the short term, I could see silver in particular, less so gold, but silver in particular maybe falling, getting sold off in the short term. But then with the Fed pivot, as they do cut rates, stop QT and probably reverse and start doing QE again, because I think this could look pretty ugly. Then we're going to see silver really take off in that environment. But this is a video that I did recently, why I'm buying this asset over silver, where I just talked about short-term bonds, why I'm buying short-term bonds, and I just explained it before, so I'm not going to go over it again. But you can do this with gold and silver. I just wanted to diversify, get a little bit short-term bonds, because I do think this liquidity event is going to happen in the first 6 months of next year. Something's going to break in the first half of next year. Second half of next year is where I think silver really catches a bid. And I keep coming back to these charts, which I've shared over and over again. Performance of this is gold, of course, but you can see in these market sell-offs. So when the stock market does fall, bonds do perform reasonably well as well. Okay, because central banks are cutting, so then you get that capital appreciation. But that's not why I've invested in these short-term bonds. It's really just capital preservation, dry powder to throw into when everything really goes on sale. And as you guys that follow insiders members will know the stocks that we own and on our watch list. And so there's a lot of those stocks that we want to add to our position and even add from our watch list into our portfolio. But we just want to get them a bit cheaper. We want to wait for the the big sell-off to happen, and then use that dry powder that we've got to buy those assets. And I share these charts because a lot of people say, well, if the stock market's going to fall, why would you buy gold and silver? Why, you should just be in cash. Or you got the Harry Dents who are like just bonds. Well, I've been talking about, we've been in a bubble. In particular, the bond market has been in the biggest bubble in history that I've ever seen. And those that in 2020 and 2021 were saying buy bonds, well, we got clients who they say to me, Steve, our superannuation, our retirement accounts, they're down, 15, 20, 30%, but we don't understand it. Like, the stock market's gone up, and why are we down so much? And I'll ask them, are you in an aggressive, balanced, or conservative fund? And they're like, oh, conservative, yeah, because we changed it in 2020. And I was like, okay, so your fund is predominantly in bonds. So what you did was you bought bonds at the top of the market when yields were almost zero. Yields were below 1% anyway, depending on what bonds you had. Well, as rates have risen, the value of those bonds have gone down. So that's where you've lost money. And, most people just don't understand that. So, but you don't have to be in cash or bonds. You can be in gold and even silver when you're measuring it against other assets. Now, what happens is usually after these market crashes, you then see massive fiscal and monetary spending or intervention, and then you get that big run up in gold and especially silver. So having a look at the silver chart. So obviously I'm a fundamental value investor, so I look at the fundamentals and I look at the supply and demand. Demand for silver this decade is going to increase. So there's the argument on the industrial side with solar in particular, but other forms of technology, that demand for silver is going to rise, and I've done some videos on that. So there's that argument that more jewelry, more demand, especially from the India and the Asian countries, from that point of view. But I actually think that when we get this credit, when we get this liquidity event, credit markets start blowing up. And then central banks just come in, and governments as well on the fiscal side, and do what they try to do and blow things up. Currencies are going to get hammered, and then you're going to see people really fleeing to the precious metals. And, for a lot of people, gold will become too unaffordable. And so there'll be a big rush into silver, and we're going to see a big spike up in silver. And I think that's going to happen, this decade. But let's just have a look at this chart, and we can chat at the same time. So something interesting that I look at is back in 2008, when silver bottomed within 3 years. So under 3 years, it then peaked, almost hit an all-time high again in 2011. And I'm just wondering if we have hit this bottom in silver, similar to this time period in 2008, and we've started to bounce off that. And when we really get so we might get another pull down, especially on if we have a liquidity event before central banks do genuinely pivot and governments come in on the fiscal side. and then we get that big spike up again. So for mine in 2023, I'm a bit like David Morgan. I can see $30 silver, but I don't think we're going to hit $30 silver until the second half of 2023. So we'll get a bounce up in the first half of 2023 when markets are going crazy. We'll see a lot of volatility. I could see silver getting sold off again, but then in the second half of 2023, when central banks do a genuine pivot, reverse course on not just rates, but more so quantitative tightening and easing, and governments come in on the fiscal side, then yeah, I think we do hit that $30 plus level. And depending on the size of that stimulus going into 2024, we could get that big spike up and break all-time highs leading into the US presidential election in 2024. But moving forward as the decade goes on, $100 silver, whether you use the Kondratiev waves, cycles, for me, it's more the fundamental side of things, and really when people lose confidence in the currency and we get that big spike up, then I see $100 silver. But if we, from this chart, if you go back to the bottom of 2008, just under $10, and it hits almost $50, that's a 5x run from there. So if we say that the bottom was just under $20 this year, and it has a similar 5x type run, well, that's almost $100 silver right there. So I don't think $100 silver is coming next year. Probably not even in 2024. But definitely within the next. Look, I wouldn't be surprised in 2024. But this is more of a longer term thing for silver. Probably somewhere between 2025 and 2028 that we could see $100 silver, based on everything that I've talked about on this channel over a long period of time. The setup is ripe. Yes, there's the manipulation, but at some point that will end, and well, we'll see triple-digit silver. But for 2023, $30 silver in the second half of next year is my price target. So anyway, what do you guys think? Love to see your thoughts and opinions in the comments below. What's your price target for silver next year? Do you think it's going to be 30? Do you think it's going to be less? Do you think it's going to be more? Really love to see your thoughts and opinions in the comments below. Once again, if you like this video, please hit that like button. Really do appreciate it. Take care, everyone, and I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.